We've got the NASDAQ 100, the S&P 500 are all having their best run that we've seen since November, and the Dow nearing its best month since 2023. So here to break this all down, put it into context for us, we want to bring in Steve Sosnick. He's Interactive Brokers Chief Strategist, here to discuss that and a lot more. So Steve, Brad was just talking about everything that we have on deck here this week for the markets. And obviously we came into the month of May talking about the sell in May, go away notion that doesn't really seem to have really taken place just yet. So how are we set up here in this final month of May?
Well, first of all, good morning, Shauna, and good morning, Brad. One thing to keep in mind is you don't know if sell in May works until June, right? I mean, sell in April didn't work. We know that. Sell in early May didn't work. We kind of know that. But we don't yet know if sell in May didn't work. We're coming into this month, we're ending this month, I should say, on a very exuberant note. Stock, basically no matter how you measure it, there's very little fear and a lot of greed. That's not necessarily bad. I'll quote Gordon Gekko, greed can be good. Yeah. But that sort of does make you wonder, have we seen all the good news? How much of it is priced in and how much is left to price in?
And so with that in mind, I mean, how much volatility should we be expecting off of and coming off of the May performance that we have seen this far?
It's tricky here because because if you measure volatility by VIX, VIX is getting, I hate to say it, I sound conspiracist, but it's really not the case. VIX is getting suppressed by heavy volatility selling from the now popular ETFs that routinely sell volatility, covered call strategies, collars, et cetera. That does put a damper on VIX because if those funds are systematically selling volatility, that's got to go somewhere, and that's going to be reflected in the price of volatility indices like VIX. But that's what the market's theoretically is the best prediction of volatility over the coming 30 days. The market is not predicting much. The market can get surprised, though, and that's always the risk of selling VIX when you're talking about low levels, below the teens. That's the problem, is you make very incremental gains on that, and then one day you find VIX is 20 or something like that because people get spooked. You don't know when that happens, though. That's sort of the minefield of the markets. Could be some Fed speak, could be anything, or it could be nothing, and that's really going to be the trick going forward.
Steve, I'm curious how you've been looking at the recent Fed speak that we've gotten out. Even Kashkari this morning making some interesting comments just about the fact that he needs to see a lot more data when it comes to inflation, when it comes to those inflation prints, just in terms of that steady improvement before he feels comfortable with rates being cut. And then he also essentially left the possibility of a potential rate hike on the table, given if that were to eventually at least be necessary in his mind. How is the market looking at this, just in terms of some of that volatility that could add, or maybe some of that surprise element that you were just talking about that maybe isn't already priced in at this point?
Here's the problem, is the market really only they don't want to hear from the supporting cast. They only want to hear from the lead actor. Mm-hmm. And the difference is Powell always skews dovish, I guess is really the right word. Powell tends to skew dovish. You think about his press conferences. Even though he's not an economist, even if he's got bad news, he'll temper it with some sort of decent sounding out. The others basically come out and tell you what they see is going to happen. This is not new. Nestor has been saying negative things. Bostic has been sort of hinting at no rate cuts higher. There's a whole litany of them. But until you hear it from Powell, the market got a little spooked when they read it in the minutes because, it made it to the minutes. But until I think the market is just sort of ignoring the other people, even though they're sending a very consistent message, and even though somehow the Fed seems to be unanimous in all its decisions. But again, they want to hear from Powell, not so much the others, despite the fact that the others have a lot to say that's very interesting.
If the markets continue to hear higher for longer from a range of Fed speakers or from the lead actor, as you mentioned, then that can kind of sideline the effect to which the Fed has on the markets, and the markets perhaps hang their hat on something else. I mean, for a while it's been Nvidia and the broader kind of thematic trade of AI. How long can that still be the case?
Well, the Nvidia trade can last a long time. I wrote a piece, that Nvidia is the atlas holding up the market to some extent. And you know what? I can't get in the way of this stock. I can't think of a stock that has been so remarkably consistent at beating estimates, raising estimates, beating them again, raising them again. Rinse, repeat. And this is, if I shudder to think what the markets would do if Nvidia stumbled. That's why I say it's sort of if Atlas shrugs, so to speak. But that can overweigh it. The other thing to think about is we managed to go from pricing in 6 to 7 rate cuts to now 1 to 2 for this year. The reason we got away with this is it's because the economy is doing okay. People, ultimately, the market's not really about the Fed. It's about earnings. It's about companies making money. It's about them being able to grow and return money to shareholders. All those nice things. And you know what? A rate cut is helpful. But really, what's the difference if the companies aren't making money? So be careful what you wish for. We don't want necessarily a weak economy that'll bring us rate cuts. I'm fine, and I've been saying this all year, I'm quite okay with having a strong economy that doesn't bring us rate cuts if it brings us earnings and cash flows.
Steve, I want to turn the conversation a little bit here, and we talk about everything that's going on in the market. One of the sideshows that we have been paying at least a little bit more attention to in the recent weeks, or recent week and a half, I guess we want to say, is the rise in the meme stocks. And I know you have too, and you laugh right now, put your hands up on your head, but it is worth bringing up just in terms of the dramatic moves that we have seen, especially in context or comparing this to what we saw and the differences from 2021. But when you take a look at some of this excitement that we have seen play out in the meme stocks, how are you looking at that? And I guess just in terms of what, underneath all those headlines, what is directly telling you about investor sentiment at this point, if anything?
This isn't going to happen if investors aren't feeling confident, if not frothy. I mean, this to me is, this to me is not a sign of market, that nerves are anywhere. That if you're willing to basically go all in on a set of companies that don't make money, and that need to continually sell stock into these periodic rises to basically dig themselves out of debt holes, that's not really, that's not really investing in the sense that I just referred to it, the strong economy, the cash flows, et cetera. I mean, the fact that GameStop is up about 20 some odd % this morning because they sold almost $1 billion worth of stock. If this were a normal company, people would be a little bit freaked out because you don't sell stock into the market if you think your stock's undervalued. You do it when you think your stock is overvalued. But in the upside down world of meme stocks, that's good news because it allows them to reduce their debt loads. These companies don't make money consistently, and so they're overvalued at normal prices. The company's telling you that, but the investors are saying, we don't mind getting diluted like crazy by the company selling all this stock because it gives them a financial lifeline. It's weird, but ultimately this wouldn't be going on if investors weren't, shall we say, exuberant, frothy. I don't know what the right adjective is.
Yeah, there's a ton of them you could throw out there. Steve Sosnick, who is the Interactive Brokers Chief Strategist. Steve, great to see you here.
Great to see you too.